Hey, Mike Cuevas, Short Sales Redefined. Today we're talking about steps number 5 and 6 in a short sale presentation and what you as the agent should actually be covering. So, first thing and this is, when you get to a short sale presentation, remember you don't talk about the marketing or anything. You really don't have to. It's your knowledge that's going to get you the listing, not necessarily who you are and where you are. But the biggest part, and your seller's eyes are going to light up like this. And what they're going to do is when you talk about the deficiency judgment section. Now, basically, what is the bank going to do with the lost money, or otherwise are referred to as the deficiency amount? What happens to the lost money? What does the bank do with it? What happens to the borrower? And so on and so on. So you need to know this stuff, because how are you going to negotiate for the seller in their corner? They're not in shining armor, and you don't even know how the bank handles the losses. Again, arguably in violation of fiduciary duty, taking a listing, not knowing the stuff. This is why you need to know this if you want to be a short sale dominant force. Basically, so 4 ways the bank's going to typically handle the loss. All right, the majority of the time, the bank is going to forgive the lien on a first mortgage and a second mortgage. Now, they're not going to offer a full forgiveness of the debt, but they're going to give you a settled or satisfied account. And 99.9% of the time, they're going to do this in conjunction with issuing a 1099-C. All right? 1099 form is pretty much the bank is viewing, saying, hey, my loss is your gain. Therefore, I paid you this amount of money this year, and you have to pay income tax on this. That's what that says. So let's break this down into the context. If the borrower owed $400,000 on the property, and the bank issued a 1099 on let's say the bank lost $100,000 and netted $300,000, they would issue a 1099 on the $100,000 that was owed on them to the borrower. Anytime anyone receives a 1099, what do? You have to claim it as income, because that's pretty much what it is. Income, and you have to pay income tax on that. Anytime you recognize funds, you have to pay tax on that. That's how our system works. Now, the good thing is that the 1099 is the best thing that you want for your sellers. The reason is this. Once a bank issues you a 1099, they cannot also chase the deficiency balance, because you see, they already wrote it off. The 1099 simply serves as a tax shelter, if you want to say, for the bank. It's a way for the bank to write off the loss and deduct it on their accounting or their books. And it's more advantageous for them 9 times out of 10 to do this versus chase a borrower for a deficiency, because the borrower is most likely don't have any funds to begin with. So you want the 1099 form. The next question is this a taxable event to my client, or the seller is going to ask you that. And due to, and please research this if you haven't already purchased my product, due to the Mortgage Forgiveness Debt Relief Act of 2007, which is in effect until December 20th of 2012, the Act states, any borrower who receives a 1099 form resulting from a foreclosure and or short sale, they are completely forgiven from having any IRS liabilities associated with the property. All right, so basically, if your borrower gets a 1099, not only will they not be chased for the deficiency, but they have no tax consequences associated with the sale whatsoever. What I tell you guys earlier in my previous videos, the highest price is not necessarily the best thing, because if the highest price was the best thing, they would have to, it doesn't make sense. The highest price is not the best thing, because there's no taxable consequences associated with it. That's the bottom line. Now, there are some exceptions to this rule and who applies for it. Okay, and it goes as this. Only if it's your primary residence, all right, or if that borrower can show that they are insolvent or show insolvency. Insolvency means anytime a borrower has more debt or liabilities than actual assets or net worth, which is going to be the case on a majority of your sellers or clients. And yes, this does include the people who own second homes and the investors who made bad investments out of their control and their properties just went underwater and they need a short sale. You want the 1099. Secondly, the bank may also ask you to do some sort of promissory note or some sort of cash contribution. So for example, the bank may say, all right, I'll settle this debt but I want you to sign a promissory note for $20,000, payable over 40 years, 0% interest, $65 a month. You would say yes or no. Highly recommend you say no, because if you know short sales, you know that's just a bluff most of the times that the banks are aiming for. The way to offset a promissory note is to always offer a cash contribution on behalf of the seller, or it can come from the buyer for a reasonable dollar amount. This is how you negotiate. This is how you get the lien settled. We don't have enough time to get in all this stuff in details. Of course, there's a lot more to it, but if you don't know this basic stuff, you should not take on short sale listings. Secondly, last step, stage 6, what happens to my credit on a short sale? You're going to get this question a lot. I want to do a short sale, but I want to remain current on my payments, and I also don't want my credit affected. And you have to qualify the people you're working with. A short sale is not meant to be a bailout program, even though it pretty much almost is. But it's not designed for that. You know, you're going to have a negative effect on your credit, absolutely. Or there's going to be some sort of negative consequence associated with a short sale when it comes to your credit. So people can't, what I like to tell people is like, listen, you can't have your cake and eat it too. I know it's tough to hear, but it's the truth. This is the better alternative. And just so you know, and check this with your local credit guy, but most banks are going to report the debt as settled for less than owed, but paid as agreed, some sort of settled account. And even if the borrower remained current through the entire short sale process, they would still have a negative effect on their credit. There is no given rule to this. Remember, credit scores are given or are created through that individual's lines of credit, that individual's trade credit history, and so on and so on. So it's too variable of a factor to ever give a direct answer. Best thing to do is just make sure that they know that they will have some negative effect on their credit. Last but not least, bankruptcy. You're going to get this question a lot. I'm a seller and I just want to file bankruptcy. I'm going to avoid foreclosure. Well, if you stay up late at night, you will see the bankruptcy commercials. And I don't know how many of you have actually seen the killer foreclosure clown and how he will come after you if you don't file bankruptcy. It's a late night infomercial. The majority of people have seen this. Now, it's not entirely true, because a bankruptcy actually stops foreclosure temporarily, but it will not eliminate it. All right? Basically, a bankruptcy is a way for a borrower to absolve their debt and not be protected from a liability point of view. All right? But they're not necessarily going to relieve themselves of the foreclosure. Eventually, what will happen is if a borrower files bankruptcy, it will protect them from any sort of deficiency or liabilities. But if your short sale is negotiated correctly, the borrowers 90% of the time are already protected from their deficiencies through the Mortgage Forgiveness Debt Relief Act I just explained. When they file bankruptcy, it's like getting two black eyes, if you want to say. The borrower will eventually have a foreclosure and a bankruptcy on their credit report. And they do have to answer yes to the question, if it's a federal job or some sort of finance job, have you ever filed foreclosure or bankruptcy in the future? And yes, they can be denied employment in the future. So if you have anyone come into this situation, do your homework. I go into this stuff in detail on the book, but you really need to make sure you know the difference. Remember, you're not an attorney, you may be, but if you're not, I always disclose, for me personally, I'm not a CPA, I'm not an attorney, I'm not giving you legal or CPA financial advice. However, this is how I know it. Always recommend to your sellers that they do the same thing. Check with your bankruptcy attorney. Make sure he's honored, or make sure he's honest and he's going to give you the right answer. And same thing, check with your accountant on the 1099 consequences, as there are none. But it is something that you as an agent do need to know if you want to truly walk someone through the correct process. Last but not least, the short sale process, not only can you absolve people's liability 90% of the time plus, if it's handled correctly, but it doesn't cost the sellers $1. All right, it doesn't cost the sellers $1. So that is the most important thing, because you will get asked this question frequently. Well, how much do I owe you? Okay, and you say, you know what, you don't owe me anything but your trust. And if you let me guide you through the situation, I'm going to get you out of it. And please send me all of your friends and families, not only for just short sales, but for my regular business, because I, as the agent, helped you out in one of the toughest times of your life, and they will remember this. There's a few miscellaneous things as well for the short sale presentations. We're not going to get into them all, but by now you should have the 6 main steps that you need to know to actually conduct a short sale presentation. You should have a guide to lead them through this, and should have some materials, which I include in my product, to walk people through this whole scenario, because it is stressful. And at the end of the day, can you make a killing in this market? Absolutely. You'll make more money than you ever had, because there is no competition. Because what you know as the average agent is more than what the other 98% of agents know, and that's not saying much just by watching a 2-minute video. So until next time, I hope you enjoyed the free info. Check out the website if you have any further questions, and I hope to see you at one of my live events coming to a city near you.